Cryptocurrencies allow you to buy and sell goods and services for a profit. Learn more about Bitcoin, including what it is, how to buy it, and protect yourself. Hello and welcome to the channel. This is CryptoNow. In today's video, we'll go over everything you need to know about cryptocurrency. But before we get started, please subscribe to the channel and switch on alerts to be notified of new uploads. Let's start with a clear understanding of what cryptocurrency is. A cryptocurrency is a digital or virtual currency protected by encryption, making counterfeiting and double spending practically impossible. Many cryptocurrencies are built on blockchain technology, a distributed ledger enforced by a distributed network of computers. Cryptocurrencies are distinguished because they are not issued by any central authority, making them potentially impervious to government intervention or manipulation. Cryptocurrencies are online payment systems denominated in virtual tokens, represented by ledger entries on the system's internal ledger. Various encryption methods and cryptographic approaches, such as elliptical curve encryption, public-private key pairs, and hashing functions, are referred to as crypto. You might be wondering at this point, what is the total number of cryptocurrencies? Hence, how much are they worth? According to CoinMarketCap.com, a market research website, more than 10,000 different cryptocurrencies are traded publicly, and cryptocurrencies continue to grow in popularity, with initial coin offerings, or ICOs, being used to raise funds. According to CoinMarketCap, the total value of all cryptocurrencies was more than $1 trillion and $9 billion on August 18, 2021, down from a peak of $2 trillion and $2 million in April. In addition, the entire value of all Bitcoins, the most widely used digital currency, was estimated to be over $849 billion, up from recent lows. Despite this, Bitcoin's market value has fallen from a peak of $1 trillion and $2 billion in April. Please keep in mind that even though cryptocurrency bills itself as a form of money, the Internal Revenue Service, IRS, classifies it as a financial asset or property. And like with most other investments, the government wants a cut of the profits if you sell or trade it for a profit. As a result, the U.S. Treasury Department announced a proposal on May 20th, 2021 to compel taxpayers to record any Bitcoin transaction of $10,000 to the IRS. The time the person holds the cryptocurrency determines whether the proceeds are taxed as capital gains or ordinary income. Now, let's look at why cryptocurrencies are so popular. For several reasons, cryptocurrency advocates are drawn to it. Here are a few of the most well-known. Cryptocurrencies such as Bitcoin are seen as the currency of the future, and supporters are rushing to buy them before they grow more valuable. Some proponents prefer the idea that cryptocurrency frees central banks from controlling the money supply because central banks tend to devalue money over time through inflation. Others like the blockchain technology that underpins cryptocurrencies because it is a decentralized processing and recording system that is potentially more secure than traditional payment systems. Some speculators are interested in cryptocurrencies because they increase in value, but they are uninterested in the currency's long-term adoption as a means of money transfer. Hello there, buddy! We hope you've been enjoying this video thus far. Please give this video a thumbs up and feel free to express your ideas in the comment area below before we discuss investing in crypto and its benefits and drawbacks. Let us now discuss whether cryptocurrencies are a good investment. Cryptocurrencies may appreciate, but many investors regard them as speculative investments rather than long-term investments. What is the explanation for this? First, cryptocurrencies, like actual currencies, have no cash flow. Thus, for you to profit, someone else must pay more for the currency than you did. This is known as the greater fool investment theory. In contrast, a well-managed business grows in value over time by increasing profitability and cash flow. Some prominent members of the investment world have warned potential investors to avoid them. Warren Buffett, the famed investor, likened Bitcoin to paper checks, saying it's a pretty effective way of moving money and you can do it anonymously and all that. A check can also be used to send money. Is it true that checks are worth a lot of money just because they can send money? For those who believe that cryptocurrencies like Bitcoin will be the currency of the future, it's important to remember that a currency needs to be stable for merchants and customers to know what a fair price for goods is. Throughout much of their history, Bitcoin and other cryptocurrencies have been everything but stable. For example, after trading near $20,000 in December 2017, Bitcoin's value plummeted to around $3,200 a year later. However, it was trading at record levels again by December 2020. This price fluctuation is a problem. People are less inclined to spend and circulate Bitcoins now if they are worth a lot more in the future, making them less viable as a currency. Why spend a Bitcoin when it could be worth 3 times its current value the following year? But how do you go about purchasing cryptocurrency? While some cryptocurrencies, such as Bitcoin, can be purchased with US dollars, others require Bitcoins or another cryptocurrency to be purchased. To purchase cryptocurrencies, you'll need a wallet, an internet tool that stores your funds. In general, you open an account on a cryptocurrency exchange and then use real money to purchase cryptocurrencies like Bitcoin or Ethereum. More information on how to invest in Bitcoin may be found here. Coinbase is a well-known cryptocurrency exchange where you can open a wallet and buy and sell Bitcoin and other cryptocurrencies. Cryptocurrencies are also available from an increasing number of online brokers, including eToro, TradeStation, and SoFi Active Investing. In addition, free cryptocurrency transactions are available through Robinhood. Of course, everything has benefits and drawbacks, including cryptocurrency. But before getting into that, kindly subscribe to the channel and switch on notifications to be notified of new uploads. Advantages of cryptocurrency. Cryptocurrencies can make it easier to move funds between two parties without the use of a trusted third party such as a bank or credit card provider. Instead, these transfers are protected by the use of public and private keys and other incentive systems like proof of work and proof of stake. A user's wallet or account address in modern cryptocurrency systems has a public key, while the private key is only known by the owner and is used to sign transactions. As a result, users can avoid the high fees banks and financial institutions charge for wire transfers by completing fund transactions with minimal processing expenses. Disadvantages of cryptocurrency. Cryptocurrency transactions' semi-anonymous character makes them ideal for various criminal activities, including money laundering and tax evasion. On the other hand, cryptocurrency supporters frequently place high importance on anonymity, citing benefits such as protection for whistleblowers and activists living in hostile regimes. As a result, some coins have a higher level of anonymity than others. Moreover, because the Bitcoin blockchain forensic analysis has assisted authorities in arresting and prosecuting criminals, Bitcoin is a relatively poor choice for doing illegal business online. There are, however, more privacy-oriented coins like Dash, Monero, and Zcash that are significantly more difficult to trace. If you're interested in purchasing a cryptocurrency through an ICO, examine the fine print in the company's prospectus for the following details. Who is the company's owner? A well-known and recognized owner is a good sign. Are there any other large investors interested in it? If other well-known investors want a piece of the currency, it's a good indicator. Will you have a share in the company, or will you only have access to dollars or tokens? This is a crucial distinction to make. Owning a stake entitles you to a share of the company's profits. You're an owner, while purchasing tokens entitles you to utilize them like chips in a casino. Is the currency already built, or is the company seeking funding to do so? The less dangerous a thing is, the further along it is. Scrutinizing a prospectus can be time-consuming. The more information it has, the higher your chances of finding anything legitimate. However, even legitimacy does not guarantee that the currency will be successful. That's a whole other subject that necessitates a great deal of market knowledge. Beyond those worries, simply owning Bitcoin puts you in danger of theft as hackers attempt to break into the computer networks that keep your money safe. In 2014, a well-known exchange went bankrupt after hackers stole hundreds of millions of dollars in Bitcoins. Those aren't usual hazards associated with stock and mutual fund investments on major U.S. markets. That concludes today's video. To be alerted of each upload, please subscribe to the channel and switch on notifications. This is CryptoNow, and we'll talk to you again in our future video.